And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you might be watching from, it's Business Morning live from Channels HQ. Hope your morning is going just great. But first off, now let's kick off with the markets now. Starting with oil markets, we see oil prices recovered slightly today, but we're unable to claw back more than 9% decline in previous 3 days. We see Brent futures trading 17 cents up, about $72.50 per barrel, and Brent has dropped more than 9%, and earlier on Thursday fell as low as $71.28. Crude CLC1 that rose 2 cents to $68.62 a barrel. WTI dropped almost 11% from Friday to Wednesday's close, and early on Thursday fell as low as $63.64 cover. We'll drill down on drivers and later on the show. That's in U.S. prices there for oil markets as in cents. So going to the global grains market now, we see grains market climbing again, and Chicago wheat futures there climbed to a one-week high today, continuing to recover from multi-month lows after concerns over renewed tensions between Russia and Ukraine fueled doubt on the future of a Black Sea export corridor. Most active wheat contract on the Chicago Board of Trade, WV1, that was up 0.4% to $6.42 for half a bushel, after climbing early in the session to its highest since April 26. The market hit its lowest since April 2021 at $6.04 a bushel. That was on Wednesday. And it's official. The former Mastercard CEO, AJ Banga, has been appointed as the next president of the World Bank. According to the World Bank, Mr. Banga's leadership comes at a pivotal time for the development lender as it seeks to better address climate change. The Indian-American business leader, whose appointment to a 5-year term was confirmed yesterday by the World Bank, is expected to take over the role from his predecessor, David Malpass, on June the 2nd. In March, the Bretton Institute had picked AJ Banga as the sole nominee for the president role. And President Muhammadu Buhari has launched the Nigeria Agenda 2050, aimed at increasing real gross domestic product growth by 7% and create 165 million new jobs across the country. Launch, which comes nearly 7 weeks after the Federal Executive Council approved the policy document on March the 15th, was conducted by the president before the commencement of the weekly council meeting. He expressed the belief that the document, which equally aims to increase per capita income of Nigeria to $33,328 per annum, be placed amongst the world's top economies by 2050, will be useful for subsequent administrations. Take a listen.
The steering committee is superintendent the preparation of the Nigerian Agenda 2050 and the National Development Plan 21-25 to succeed the Nigerian Vision 2020 and the Economic Recovery and Growth Plan 2017-2020, respectively. Your Excellencies, distinguished ladies and gentlemen, at the inauguration, I charged the steering committee to prepare inclusive plans that would cover all shades of opinion and ensure even and balanced development, as well as put in place necessary legislations for continuous implementation of plans, even after the expiration of the tenure of successive administrations. This was achieved with the preparation of the Volume 3 of the National Development Plan that deals with legislative imperatives who identified binding constraints to plan implementation in Nigeria.
And joining me now to analyze this Agenda 2050 is Mr. Paul Alaje, Senior Economist, SPM Professionals, joining me from our Abuja studio. Great to have you on the show. Good morning.
Good morning, and thank you so very much for having me.
So we see the agenda there presented by the president is aimed at ensuring Nigeria attains a GDP per capita of $33,328 per annum, placing the country among top middle-income economies in the world. That's by 2050. Quite a lofty forecast there, but how are you seeing this?
Well, a beautiful plan. We have seen it on paper. It's a fantastic plan. And if you put that to Naira, we are talking of 15.3 million per annum per head. When we say per capita in economics, we mean per head. And government is also saying that each person per month, on the average, we earn about 1.2 million Naira. Maybe perhaps minimum wage for that to be a reality would have increased, would have since increased beyond 1.2 million Naira. This is 2023. Government is projecting that by 2050, what each person will earn in Naira terms will be, and I'm using official figure. If I use parallel market rate, this may even increase to 1.8 million, 1.2 million Naira per head per month, and about 15 million per annum, based on the presentation that was made yesterday. That is what he said. Government is also looking at investment growing. We're about 29.4 now. Government is hoping that that will grow to about 40.1%. It's also hoping that unemployment, which is currently 33.3%, as a 2020 Q4 report by the National Bureau of Statistics, that will reduce significantly all to 6.3% by 2050. Those were the things that were said. And there are a few things that were not said, but these things that are not said are perhaps the most important factor in knowing whether some of these aspirations set by government will be a reality or not. The first one is population. As I talk to you today, the population of Nigeria last month, the last day of last month, estimate it was 222 million. By 2050, the population will be about 400 million. Now, when we say that the population, the unemployment will reduce significantly, poverty will reduce significantly, investment will increase significantly, and these were the things government have said. But what government is not saying is that, are we going to have birth control? Because if we grow our population to 400 million. Right now, we are the 6th largest population in the world. If we grow our population sporadically by that rate, what will happen? How are we going to get the job? Which road are people going to do? Which job we put people in employment? So it's a beautiful plan, and government, unlike what we had in the National Development Plan 2021 to 2025, a 5-year plan, we're in the middle of that plan as I talk to you today. Government is hoping that approximately 348.1 trillion will be spent to fund the budget, and that the 3 tiers of government, federal, state, and local government, we spend approximately 50 trillion naira. But to speak properly, I am referring to 49.7 trillion naira is to be spent by the federal government. So when you look at all of those, and government is hoping a whopping amount of 298 million naira will be spent by private sector. Till today, this is the middle. Can we say that we have achieved 50% of this plan? Of course, your guess is as good as mine. We have not achieved up to even 25% of 2021 to 2025. Now, this is a benchmark for Nigeria Agenda NA 2050, as it is called. So the question is, the foundation of this plan, like we had issues with economic recovery and growth plan, there has no amount of money to be spent by government. Government have good idea, and we must support government with this good idea. But we must also say, we must also provide guidance so that this aspiration, to the best of my knowledge, is an aspiration that government has to see Nigeria as one of the desirable places to live in by 2050. But critical question is, what power, what volume of power are we going to be generating before 2050, even by 2025, by 2030, by 2035, by 2045, and by 2050? What decision are we going to take? Is the nation going to be running on diesel? Are we going to be running on an average of 6-hour availability of by centrally provided electricity per day? or are we going to increase that to nearly 24 hours per day? If there are things that must be done, there are sacrifices that must be given and be paid for us to reap the dividend of any 50-50 Nigeria plan. I believe if government has the will, it will be achieved, but these sacrifices must be discussed, and we're going to have results by as it's written.
All right, Mr. Laje, let's do a mini throwback now. Let's go back to, projections we had for, say, 2010, 2020, and all of that lofty, aspirations. What would you say is the main reason we're not able to hit some of these aspirations?
Okay, so for me, why we are not able to hit 2010 and more recently under President Buhari Economic Recovery and Growth Plan that said we are going to have reduced inflation, unemployment will perhaps reduce to between 10 or 15% or so. At the end of 2020, unemployment that is projected in the document almost times 3. It is because we are not discussing, we are not having an holistic conversation. It is easier to quickly project in terms of reduce unemployment, reduce inflation, reduce poverty and all of those things. But what are the building blocks to unemployment? As I talk to you now, we are going to have approximately 60,000 children by 11:59 p.m. today. Those are new people that will join the population of Nigeria that we don't want to talk about, whether they should come around or not. China used to be the largest population in the world. Today, it is now India, because China made policies that will essentially affect the way we invite people to the world, whether we like it or not, because the burden of that invite or the invitation will be felt on our roads and a number of other things. Also, how do we spend money? How do we generate money? How do we make life relatively comfortable for people? There are discussions that we must have. There are decisions that we must take. So I've seen from 2010 to 2020, that's 2017 to 2020, Economic Recovery and Growth Plan, and the current plan as we speak, 2021 to 2025. Why most of these plans are not achieving the results, number one, will be because the projections are one-sided. They are not balanced. Two, I doubt if professionals of different walks of life are looking at the document. For instance, you are talking of healthcare. I don't know if Medical Association of Nigeria, their representative, have input and they can talk about the real challenge, so that when we are talking of costing and what governments must do to reflect in our national budget to be there, we are talking of building strong educational system, a population that is strong, that is wise, and that is healthy. But ASU just went on strike for 8 months. We are still talking how much ASU should spend. ASU is still fighting as to what government should actually rehabilitate university. And we say that we have a plan and we will achieve the plan. The truth is, there are sacrifices that we must make, and I hope that, issue of power and so many other things that we have said, even on this show time and again, government will look at it, put it into the plan. We can still adjust this plan to make it a reality and put a number to it, and we achieve it once all of those are done.
And talking about, making this a reality, I want you to break it down for us, some of these, sacrifices that we have to make at this time, because we have a new government, coming in, and definitely there are going to be other governments going forward up till 2050. What should we start laying right now as foundation to actually make some of these aspirations a reality?
Okay, so economic is not a rocket science to fly, and it's not as though we are going to the moon. We have seen nations develop, within 20 years, properly speaking. And what did they do is what we should look at, and look at how that can be adopted within the reality of our country. I'll give you an instance. We have a lot of agrarian, we have a lot of communities. 60% of Nigerian land are arable land that support the growth of agriculture. And we see people planting here and there, but there is no organization, there is no structure. People just go plant. Sometimes with the support of Central Bank of Nigeria, monies are given to farmers. Whether the farmers are particularly organized or coordinated is a different ball game entirely. But we need to have established farms with the support of local government. Local government will will not just be the tier of government that collects between 100 to 150 million to pocket every month. There must be responsibility. There must be performance measurement. Different part, at least of over 700 local government and area council, 774 that we have in Nigeria. We can select about 500 or 600 and earmark lands, portion of land that is organized with provision of security for output. It could be production of paddy, it could be production of cassava, it could be production of maize that is organized. We had this in the First Republic. So I'm not saying something new. We had this in the First Republic, areas where cocoa, cashew, they can be supported. Government must provide, we must see the presence of government to guide farming, so it must be structured, it must be organized. After that, we go into the middle level of economy, which is manufacturing or secondary level. What are we going to be doing there? Government must ensure relatively constant power supply. I'm not saying government should generate power or transmit power. I'm saying government must put the structure together to ensure that power is available. When a cotton farmer has an output, then we need industry or sectors that will convert what of the output into a finished product. And that is where the job lies. That is where over 60 to 70% of people that are unemployed today will be mopped up from unemployment and they will become employed individuals. Then we're going to have a robust banking system. We're going to have a robust insurance system. That is service, which of course is the tertiary sector among the three levels of what you have in an economy. So I strongly believe that government have responsibility and the people have responsibility. When you see a train, the head directs what other coaches will do. The head in this case is leadership. The leaders of the country must understand their responsibility to perform, and the coaches, which are now the people, we follow. So you want private sector to invest in certain area. There are questions that we ask. Do we have input material? Do we have power so that our machines, our equipment, our processing plants can work? And do we have a banking system that will support us? Do we have a government that will not tax us out of existence? So when all of these come together, I believe that we can now have some projections such as having single-digit inflation, having single-digit unemployment figure, reducing unemployment even to 6% as being projected by 2050. But I can tell you that we don't even need up to 2050. If you give me about a minute or two, in 1945, the Second World War ended in 1945. After the Second World War, the number of people that died as a result of the war were lower than the number of people that died as a result of starvation after the Second World War. I'm not talking of African countries, I'm talking of European countries. These countries by 1965 to 1970, they became where people wanted to go to because leaders of those countries have formulated policy. They have borne candle at night, if you like, figuratively, to ensure that their country develop again. They have put infrastructure in place within 20 to 25 years. This is 2023. We still have 27 years to 2050. And I don't think just this document alone will be enough. We need that conversation at the National Assembly among different political parties, political leaders, gatekeepers of our country, to ask ourselves, where do we want to be by 2050? Do we truly want to be among the top country in the world? And we ask, in terms of education, what should be our position? In terms of health, in global ranking, what should be our position? In terms of income, what should be our position? In terms of manufacturing, what should be our position? When the name Nigeria comes to mind today, what comes to people's mind? And by 2050, what will come to people's mind? When a Nigerian travel and you carry the green passports today to several countries of the world, how are you perceived? It used to be the same for China in the 60s and the 70s. Today, when a Chinese carry that passport, there is a different perspective of him. What must we do? And I can say this is achievable because in the 60s and 70s, when you see an India, you see a mystical, a magical, somebody who might have some spiritual power. That is not the case today. When you see an India today, you perhaps think maybe it's into ICT and so on and so forth. The same was South Africa when you see slavery and so on before the 90s. Today, when you see a South African, you have a different perspective of them. The belief of a Nigerian can change. Our national belief can change, but it must start with those that are leading us. And we followers must be followers indeed and have the same belief that nation can be the most desirable place for people to live in on earth.
Well said, Mr. Alaje. But very quickly, before I let you go, it's official now. We see the Senate has approved the request to restructure the 22.7 trillion loans from the central bank to the federal government. Very quickly now, what's your reaction to that?
Well, it means we have postponed. It's going to relieve the pressure on government, because I had, as I've said and written in the papers, that would mean if that has not been done, federal government would have been servicing that loan with about 3 to 4 trillion naira. But with this restructuring, it has reduced the pressure. What it has not done is the debt stock. The debt stock will still be added to 46 trillion naira announced by the Debt Management Office, which means President Buhari may still have to pass that huge debit check to President-elect Senator Bola Ahmed Tinubu.
All right, thank you so much. We'll have to leave it there now, Mr. Paul Alaje, senior economist, SPM professional. It's great always having your perspective. Thank you.
Thank you so much for having me.
All right, now to our next conversation. We see the World Bank release its 2023 Logistics Performance Index report, urging developing economies to boost their economic growth through improvements in logistics for goods transportation. The report is a measure of a country's ability to move goods across borders with speed and reliability. Well, joining me now is Mr. Adebayo Adeleke, founder, Supply Chain Africa, joining me right here in the studio. Great to have you.
It's good to have you. It's good to see you, finally.
Finally, yeah. With the last conversations we've had on the show, it's been virtual.
Absolutely.
Yes, and now we're in person. Thank you so much for honoring the invitation. So I'm looking at the report now. We see Nigeria has a score of about 2.6,
yes,
points, and definitely is not as good as most of the developed nations we have. But how do you see this this score that we have right now?
I think Nigeria actually, in all sincerity, actually should be lower, because I've been around for quite some time now. Traveling the country and the ability to move, the freedom of movement. If you cannot move freely within the country, then you cannot move goods and services. And logistics is the infrastructure that kind of laid those things to bear. Our road network is poor. We have about 160,000 kilometers of road, about 60,000 of it are paved. And if you cannot move those things through the road, the rail is absent, for the lack of a better word. And our intermodal, transportation infrastructure is absent. Our warehousing is deficient, considering, look at gentlemen that came before me, talk about population, depending, I have a difference of opinion on Nigerian population anyways, but that's a different case in point. But those things have to be in place for our logistic performance index to be up. And I think Nigeria so far, I think they pretty much from last year, they haven't done that much shifting to the left or to the right. South Africa has remained stagnant as well, but it's quite improvement in Botswana. Egypt has relatively maintained the same thing. Rwanda came up as well. All these countries are making leaps and bounds, and all of it, for you to actually, we can actually build more roads. If you can actually build more roads, we can actually move up, because with roads, you can actually penetrate a lot of, you can bring product from areas of abundance to area of scarcity. Because right now, without that, we'll not be able to do anything. Now, our rail is absent. Our waterways, transportation is absent. We rely majorly on roads, and that road, we don't have enough of it. For example, state of Texas, where I reside currently, has over 600 and almost close to 690,000 miles, about close to about 1 million kilometers of road network. And Nigeria is bigger than Texas. And the road of Texas is bigger than the whole continent of Europe. But yet, Nigeria's population, Nigeria's land mass, in compared to Texas, is not that much. Maybe you had a little more state in the US. But Nigeria is bigger than Texas. But yet, Texas has over close to 1 million kilometers of roads. And yet, we still complain over there that we don't have enough roads. Those roads are necessary for economic development. They're necessary for, if Nigeria has to move up, and help in facilitating trade globally.
And looking at this logistics performance index, how can developing economies use this index to better manage their logistics?
All right. So if you're following it, you'll be hearing de-dollarization and deglobalization that is going on. After COVID, it shows a lot of fault lines in our supply chain and logistics globally. As you can see, a lot of, even till now, if you look at different logistics report, the economy is not where it is supposed to be globally, and largely because of supply chain issues. So now, for developing countries to be able to move up, there are a lot of things that needs to happen. They have to build more, and for them to build more, because a lot of people are reshoring to different areas to kind of decentralize or to decentralize, that hub in Southeast Asia, China, and the rest of Asia. So a lot of people want to kind of, move their stuff around so that they're not, they're not a single point of failure. And Africa has been a point. Most developing nations are actually in Africa. A lot of people are looking to Africa. But for that to happen, our logistic performance index has to be up. So for us to be able to facilitate, manufacturing, we have to build more. And I cannot stress building more roads, building more port facilities, warehousing. If we can actually do those three areas, just those three areas, and make sure they're kind of locked in, because there's one point developing roads, there's another point making sure that those roads work for you. So if you build, which I've seen largely among some of the road infrastructures we're doing in Nigeria, they're not interlinking. The road, especially logistical roads, they have corridors. The flyaways, the flyover have to link into this. And some of Nigerian roads, sometimes the way they are constructed, you kind of wonder, they're supposed to be in sync with the urban and regional plan, because all these things work in concert. They just don't work in isolation. So we have to build more. We have to build more. We have to build more.
And be intentional,
Exactly.
All right, let's look at the currency, aspect of trade at this time. We've been hearing a lot of talk about de-dollarization. You did mention it earlier, and I'm looking at it like, is that what's going to help us, out there with our trade if that actually happens? We've seen a lot of analysts have said that can happen for the next 20 years, that the dollar will still remain, that major currency we run to for international trade. But with de-dollarization, will it have any positive impact for our trade?
No, not much. American dollar is still going to be the supreme for years to come. As the analysts have said, they know better than me. I'm just a supply chain and logistical guy. But apparently, there's a lot moving on. A lot of this thing is driven by geopolitical issues. You have to understand that as well. BRICS is one element that is coming together, and you can see their geopolitical alignment is completely different from the West. The West has democratic values, and you can say, and I think the reordering of the world order is going on as well. China, Russia, and those that have those kind of political construct, they're kind of gravitating towards that. People that have democratic values as well are kind of pandering to the West. And I think that structuring is going to go for a while. But geography and demography is going to be the key player in this whole thing. And oftentimes, most of these things can be predicted. These things are not something that somebody just pull out of a hat. If you look at your geography and your demography and look at, okay, is it going to be? America is being bordered by two oceans, both the Atlantic and the Pacific. They're in a good position. Africa in itself, we're both at Atlantic on the side, we have Indian Ocean as well, we have Mediterranean. So we are positioned to do different things. So, but for us, I think our ability to continue to produce, we have the human capital, we have the resources, the natural resources that the world needs. The ability to tap into the value chain is going to be our key factor, because right now, a lot of things are moving outside the continent. The Russians are here to play, the West is here to play, the Chinese are playing already. And everybody that is giving all these things to Africa, they're not doing it out of their own free will. Everybody wants something out of Africa, which is fine. You can ask them, you can say, you know what? At least we're being used. Only good people being used. You can look at it from that construct. But at the same time, you also have to look at it at what extent are we mortgaging our future out? Because all these resources, that is driving out of continent, what are we getting out of it? We have to be part of the value chain, because these particular resources are leaving the continent, but they're coming back, we're still buying back in high dollar. Can we be part of the value chain in such a way that by the time we give it to you, we already at least we have derived something tangible out of it? And I think with that, if we can actually kind of toe that line, I think we'll be in great shape.
And looking at the report, it says the biggest delays occur at the seaports and airports, and definitely that's something we've seen, right here in Nigeria. Have we had any improvement so far?
No, it's not. And I understand Lekki has started as well. It's going to those delays until we address those pertinent issues. Supply chain and logistics education is lacking on the continent. At least my estimation, we have over 100 million of supply chain and professionals across the continent. And to be honest with you, most of our certifications comes from the West. We have not actually inculcated our own indigenous and unique methods into our supply chain programs. So how do we continue to have Western processes to operate in African landscape. There'll be a lot of friction. So oftentimes, what you see the deadlock over there. And of course, we have our own issues that are local to us, containers issues, fraud. And then we have custom issues as well. We have a lot of, I'll call it cultural nuances of, is it that corruption or bribery and all those things that are kind of, clogging the system. But ideally, I believe that if we've done a huge work, if we can actually do a due work in making sure that our supply chain professionals are educated. I've been advocating things for long that Africa as a whole should actually develop their own curriculum of how they want to be doing business. Now try to those kind of curriculum to fit into the Western and the global ways of doing things.
What kind of digital technology should we be looking at to boost ease of moving goods in the country?
There is a lot. There is a lot that's out there. I mean, as you look at the report, that the logistical performance and traceability and ability to view is one of the things. One of the huge issue in this report is transparency. That's what we saw during COVID. People couldn't view. They don't have eyes on their supply chain. They don't understand their supply chain mapping. So ability to actually craft supply chain mapping software that people can view where their product is at all the time. I'm not talking about, you're tracking your, go-card or whatever, dispatch rider stuff. I'm talking about ability to have a view of us where your products are globally. So in your supply chain, I think goes a long way. And more importantly, our end here is the issue of security. Security is the existential threat that plagues African supply chain. Not only a supply chain alone, but economic development, everything. So any technology that is going to help to kind of give freedom of movement, that is going to help people to be able to decide, to be able to move freely, because that in itself, if we can actually make improvement with that hand, we will see a huge improvement in our logistical performance index.
And definitely we need to move from being import dependent.
Absolutely.
And produce.
Absolutely. Build and produce.
Produce. Thank you so much, Mr. Adebayo Adeleke, founder, Supply Chain Africa. It was great having your perspective
today. Thank you so much, Laddie.
Thank you.
Thank you.
All right, so next we're going to be having the commodities market update segment. That's in a moment. Business Morning returns. Do stay with us. And it's rate-setting season globally. And yesterday, the U.S. Fed raised rates by 25 basis points in May, just as markets expected. Well, joining me now is Oluwatomi Mayowa, analyst at Financial Derivatives Company. Great to have you on the show.
Thank you very much, Laddie, for having me.
So the rate range now is between 5 and 5.25%. We've seen that 25 basis points. All expected, but it's making it the 10th rate hike in this cycle. How do you see this, and how are markets reacting to all of this?
Like you said, that it was actually widely expected, and about yesterday, oil price actually fell to about a low of $72 per barrel. And why did we see that? First of all, the U.S. economy, we saw that in the first quarter of the year, it slowed to about 1.1% from about 2.6% in Q4 2022. So the interest rate hikes that we've seen so far, has actually been affecting the U.S. economy. And then we have the banking crisis. The First Republic Bank actually joined the bandwagon of the collapse. So all of this, we've seen that the U.S. Fed interest rate hikes has actually been affecting the U.S. economy, and so we saw that market had to, markets were reacting towards that, because we saw that decline even in the stock market prices, global stock market prices. So actually, like you said, this is the 10th consecutive increase in the U.S. rates, and also this is also the highest in 16 years. And so the implication of this, it has wider implications, especially for Nigeria. First of all, that when there's an increase in interest rate, it makes the currency of that country attractive and then stronger compared to other currencies. And so as a result of that, we're going to see the currencies of other countries weaken because of that hike. And then considering the fact that a larger most countries actually own a larger percentage of the dollars, in their reserves. So as a result of that, it's definitely because of the fact that the US dollar rate is now stronger. It makes imports actually expensive, especially looking at Nigeria now. We're going to see an increase in imported commodities in Nigeria, and then it also makes borrowing expensive, especially for Nigeria. Looking at the fact that we have weak public finance, so it will be difficult for us to, cover our, there will be increase in deficit. So it will be, as a result of the increase in this dollar rate, we're going to see that it will be difficult for Nigeria to visit the international capital markets, and so all of this has wider implications for Nigeria also.
And talking about implications, now we've seen the banking contagion fears in the U.S., and we've seen analysts expect that the U.S. Fed will pause on the rate hikes going forward, so that the banks don't fail. But we've also had major rate hikes here in Nigeria, but it looks like the banks here are still doing very okay.
Yeah, because why we are saying that, number one, we must know that in the US, the monetary policy rate is very connected to the rates, to the effective rates in the US. And so once there's a rate hike in the policy rates, we see an immediate response in the market. And then we see mortgage rates increase, we see the treasury rates increase, and all of that have serious or should I say quick impact on the market. But compared to Nigeria, when there's an hike in interest rates, we see less response in the market. Take for example in February, when there was over 100 basis points increase in interest rates in Nigeria. But at the end of the day, we saw that the 1-year TB rates fell to as low as 2%, considering the fact that the MPR went to about, I think it was about 16.5 then. So in Nigeria, it is less linked. There's always a lag when there's an interest rate hike in Nigeria. So that's why that's one of the reasons why we might not see that impact. And then according to the CBN, you saw that there's still the banks are still strong. There's still high liquidity in the bank. And then it's because the primary reason is just because the interest rate in Nigeria is less linked to the effective interest rate. So that does not have serious impact compared to the US economy.
And I see there's a movement in the global oil market now. We're seeing some kind of recovery, but is this one going to be sustained?
Yeah, well, I would say that because the fundamental issue is still there, which is about the supply. The OPEC plus cuts is actually starting this month, and that is still a fundamental issue, that supply of oil is still short. So the market. And then the US Fed had already signaled that it's going to pause on its rate hike. So markets are being positive that as a result of this slowdown, then the recession that most economists are expecting might not really later happen for the US economy, even though growth is going to slow down. So there's still this positive sentiment that on the long run things might not go that bad, considering the fact that the US is expected to pause on its rate hike.
All right, what are you seeing for wheat prices going forward? We're seeing some geopolitical tension there starting to raise prices right now. What are you seeing going forward, even though the World Bank did project that most of these prices are going to come down in 2023?
Well, first of all, I'll say fertilizer prices are still quite high. And so that would, it's going to affect, and it's still short in supply. It's going to affect the usage of fertilizer on, on crops. And then considering the adverse weather conditions that we're having, that will hobble wheat production. So we are still going to see higher wheat prices, considering the fact that the geopolitical tension is still there, and there's not been, increase in production, since the war had started. Even the fact that other countries that produce this wheat are also experiencing adverse weather conditions. So we are going to see prices of wheat will still remain elevated. However, compared to last year, it's going to fall compared to last year. So that would ease inflation in most countries, especially for Nigeria, where we import wheat in Nigeria. And so although because of the dollar has now appreciated, looking at the currency rates, it's going to make imported when we import wheat, it's going to make it more expensive. But compared to last year, that would ease a little bit.
All right, we'll have to leave it there now. Thank you so much, Oluwatomi Maiwa, Senior Analyst, Financial Derivatives Company. Thank you.
Thank you very much for having me.
All right, we'll take a moment now. Business Morning returns in a moment.
Fertilizer.
All right, let's head straight on into the markets now. We have Anita Edet with the details. So, Anita, yesterday, that's about 49 billion wiped out from the market cap. Quite a big number, but not from our pockets, though.
Exactly. It was from the pockets of the NGX, and no doubt that's what you might call profit-taking. Remember, we talked about, that was on Monday, we talked about the market selling may and go away.
Right.
So, and this is just the second day of trading. Today is actually the fourth, but the second day of trading at the NGX. So maybe that is what is coming into play. But then at the same time, we will be talking.
Maybe it could be buy in May and stay in the market.
Yeah. Well, of course. We also had on the activity chart, it was kind of a positive side. We saw some buying sentiment, but like I said earlier, it's attributed to sell pressure or sell profit taking by investors in some of the market components. Right. So with that being said, let's just go straight to the market's performance at the close of middle trading session. So 48.92 billion naira. This is what the market lost. A second day of losses at the NGX, and that's a day after the market marked its return to full trading session, full trading activities, which means that people will be going directly to the NGX to buy shares or meet with brokers instead of the virtual or the remote trading by traders and investors. So at the same time, the all-share index was down 0.17%, or about 88.71 basis points, in contrast to what it lost on Tuesday, which was down by 0.20%. So in sectoral performance, it's mostly green pictures there, but we saw the impact of Nigerian Breweries' 6.1% drop in its share price take its toll on the consumer goods counter of the NGX, while at the same time the market's loss is mostly attributed to MTN's loss of about a 0.7% drop in its share price, no thanks to the effect of price profit taking by investors there. So like I said, the market was positive on the sectoral performance, but in terms of profit taking, consumer goods, not Nigerian breweries, but MTN Nigeria. Now, let's take a look at the activity chart. The activity chart, we also saw more, the volume was up by 21.71%, so which means that we saw some shares being traded much more in contrast to what you had at the previous session. But in terms of the value was down, while the deals was up 6,254 deals for the market. So far for the market, the month-to-date loss has increased to about more than 0.44%, while year-to-date is 1.87%. Now, with that being said, let's talk to Bimbo Moronkola of Stanbic IBTC, equity trader there. So she will give us more insight into the market. Thank you for joining us, Bimbo.
Good morning. Thank you for having me.
Okay. Can you please talk us through the market's activity at the close of mid-week trade session. At the same time, you're a remote trader, but how do you see this full return to full physical activities at the NGX?
Okay, thank you. Like you rightly said, the market lost 20 basis points on Tuesday, and we also saw another loss yesterday, where the SI dropped by 17 basis points. However, I will say that it's still more mixed sentiments, like you rightly said. So, because aside from the selling, the sell-off we're seeing from investors taking profit there, we're also seeing some buying interest, especially in the banking names. For example, we saw the likes of GTCO that was marked down for dividend on Tuesday to 22 naira, gained on Tuesday, and as well gained on Wednesday. Closed at 23 levels yesterday. Yes, it was marked down to 22 naira 5 kobo on Tuesday, and it closed at 23.05. So, as well as aside from the fact that of course there are selling pressure in the market in terms of investors taking profits. Also, we are seeing improved demand in some of the quality names, assets as well. However, it's still more of crosses and block trades that are dominating activities in the market. We saw over 100 million units of Transcorp shares being closed on Tuesday and yesterday. Even this morning, we've seen another 220 million units of Transcorp be crossed on the market. So the volumes traded in the market shows that it's still demand in the market in the quality names by investors that are comfortable to buy at these current levels, as well as some are still taking position in some of those names that are yet to mark down for dividend. However, it's like I said, yes, bearish sentiment it's likely we'll see more of sell-off. However, we'll still demand in the market. Then in terms of the market that was opened yesterday, that's a trading floor for brokers. Yeah, it's going to open provide platform for brokers to collaborate in terms of enable them to access flows to match their orders. We see brokers engage each other, asking for offers or bids in some certain names. So there will be easy access to brokers to enable more transactions and cross deals in the market. Also, there will be room for platform for them to discuss, to see as a strategy on how to deepen the market. I also feel that since COVID, we've seen like a reduction in the fact behind figures where issuers come to the market to engage brokers. With the resumption of the trading flow, I guess that we might get to see more issuers in the market to engage brokers. Yes, and also there will be easy access to market information. So it's a positive one for the NGX to resume the trading. There's a physical trading on the NGX trading floor. Okay. Thank you.
Okay, thank you, Bimbo. So we'll leave it there, and we know that trading is continuing at the Nigerian exchange, but which side of the coin it goes, well, we'll wait to the end of today's trading session. So that was Bimbo Moronkola of Stanbic IBTC Stockbrokers. Now, for the fixed income markets, the bonds market, it was bullish sentiments there. We saw the average yield slip by about 1 basis point to about 14%, but on the board, for the FMDQ securities markets trading, we saw much attention focused on the 18th of April 2037 paper, which has 4 deals there. But when you take a look at the bigger picture there, total number of deals carried out was about 9 and 2.40 billion naira. Moving over to the Treasury bills market was quiet, which is what you see here. Just 3 deals carried out on the 14th of April 2024 paper. And then we had the value just at about 1.5 billion naira. So, Ladi, that's it for the markets. Yeah. Other markets, for the unlisted securities market, it was positive. Positive.
All right, looking out for close today for the NGX and final trading day for the week tomorrow. Exactly. Thank you so much, Anita. Anita giving us the details from those markets. So now we head on to the crypto market. Now we see the sentiment in the market still quite greedy, even though we see that traders are still, trying to understand, what the U.S. Fed is going to do going forward. That's forward guidance with their rate hikes, hoping that this will be the last rate hike for the year 2023. So we see the market sentiment there, 64 points. We've seen that range between 55 and that 60 level, and still hanging on to that 64. Greed, not extreme greed yet. We know what happens when extreme greed hits in this market. Let's look at the top cryptocurrencies that we track, plus altcoins. Bitcoin there marking a 2.48% gain yesterday after we got that rate hike, 25 basis points by the U.S. Fed. Ethereum, $1,901, still below that $2,000 psychological level, 2.22% up. BNB, yeah, we got that report there, the busiest chain in the industry there. That's the Binance chain. That's the report. There's the busiest one. And we see the BNB coin trading $326 this morning, up 1.22%. And we see Cardano, that's also up 2.47% at 39 cents. Let's bring in Michael Naji now, financial market analyst. Hello, Michael. Great to have you.
Hello, Eddie. Good morning. How are you?
Good morning. Great to have you. So, yeah, we've got it, 25 basis points by the U.S. Fed. But we've seen Bitcoin, it did jump after we got that we got that rate hike, yesterday. But listening to what Jerome Powell had to say, any bullish comments for Bitcoin and the crypto market?
I think overall, what is more, there wasn't really anything that was bullish about what he said. There is a great deal of pain still to come. Like in terms of rate hikes, I think we still have one more left in stock, and there isn't really a great deal of pausing. There's not really a great deal of cutting that we can expect. Sorry, in the foreseeable future. So because he's repeatedly stated that he expects rates to stay higher for longer. So that will affect the crypto market. However, though, it's important to realize that as he holds the rates for longer, the banks fail, and Bitcoin keeps on looking like a light on a hill that keeps shining as a beacon of hope for people who feel that banking no longer works for them, and who no longer feel like they can trust their assets in the banking system. And so, the longer Jerome Powell honestly carries this on, the stronger and the better Bitcoin looks. It's just a reality that we're facing, and it hurts in the meantime. But once this is all said and done, the halving is really only 360 days away. It's less than a year away. So I think the more pain Jerome Powell actually impacts on the market, the better off Bitcoin will be for it in the next coming halving cycle. So right now is on all technical levels, all technical time frames. It's a great buy, and so I really do think most of the pain this year we will see in Bitcoin. It's been good since basically January, but I think most of the pain we will see will be, if there will be pain, it will be most likely in the later half of the year, closer to mid Q3, Q4. But by no means do I think it's going to be a long or pronounced downturn. I think, if anything, us being at 30K now is a good thing, because a 60% drop from here would only be about 14,000. So at the end of the day, I think fundamentally, I really do believe that we're at a good place to drop.
All right.
If we were at 15K and we were facing a 60% drop, I think there'd be a lot of tears in the market if we had to look at 7K as the target.
I know,
but because where we're at, we have a better point of support. The market can bounce from a more healthier level, even if there's pain in the market. And so I really do think people need to have that longer term view.
Okay.
Because a lot of the times, what is 50% down from here? It's 15K. We were at 15K.
All right, Michael. I would see investors are having fun with all those meme coins in the market right now, but we'll keep tracking to see how it goes. But thank you so much, Michael Naji, financial market analyst. Always great having your perspective.
Thank you so much, buddy.
All right, so let's look at the top gainers now. We see Wu Network topping the counter, 28 cents, up 12.68%. So we're beginning to have some double-digit gains with most of these altcoins in the market. CFX, 33 cents, up 9.36%. And we see Phantom there, DAG protocol there, 43 cents. That's up 6.99%. Maybe it might start another bullish run. Let's look at the top losers counter. That's one of the new ones on the block there, down big 69.58%. I'm guessing investors are getting some of their tokens there from the airdrop. And we see TON also on the counter, 2.57% drop is what we have. So that's how the crypto market is looking today, and that's a wrap on the program. Thank you so much for watching. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. Remember, you can watch this again on our YouTube channel. Just flip over to YouTube and watch all our productions. Thank you so much for watching. I'm Ladi Williams. Bye for now.